Welcome back to Your Average Investor. Today we're going to do a weekly review of everything that happened in the stock market last week. Well, not everything, of course, but some notable things such as reviewing the Gamestop and AMC price action, as well as notable earnings such as Walmart, Home Depot, Alibaba, and a few others. Overall, the S&P 500 had an incredible week, along with the broader market in general, primarily based on the last few days of trading when there was a large jump up as the inflation report came in and it was cooler than expected, maybe alleviating some fears, the inflation data. Now, what's interesting about that is a lot of people are talking about this, is a lot of the jobs and inflation data, they'll release it and then a month or so later they'll go back and revise it and it will be different. So maybe a storm is brewing, that's one opinion, but if you're in the bull camp right now, you're sitting super happy with the S&P 500, QQQ, which is NASDAQ, of course. All of the major indices are up, hitting all-time highs. Now, let's get to the exciting action first, and then we're going to move into some of the other stocks. First is GameStop and AMC. So what happened here, if you're catching up, you can look at some of our previous videos. A brief overview is there was a little bit of a rally about 2 weeks ago on GameStop. It started basing and then closed right here on Friday. Sunday night, Keith Gill, aka Roaring Kitty, who's been completely silent on all social media for the last 3 years, posted on Twitter, and that caused an intense spike in the price of GameStop on Monday, followed by a larger rally Tuesday. Pre-market, this was actually up at $80 a share, and then an immediate sell-off the next couple of days with a lot of possibly manipulative stock market halts, and a notice that GameStop would be selling some shares. I think the number was 45 million shares to raise cash for operations. AMC went up in sympathy with GameStop. You can see here right at the same time from about $3 a share. I think they hit $15 a share in pre-market. AMC also mentioned that they would be doing an offering to sell some shares and raise money. Actually, theirs was a little bit different. What they did is they promised some shares, they exchanged some shares in order to write off, I think it was $164 million in debt. What's interesting about that, though, is the shares that they gave were valued at something like $7.14 per share. So that's what they exchanged the shares for, as a value of $7.14. And currently the price is back down here at 4.4. Notably, it's resting right on this volume weighted average price that's anchored to the lows here, and it's sitting on a decent volume shelf of the $4 range there. We'll get into some more commentary next week on GameStop and AMC as these plays continue to unfold. I would guess that the stock market rally or the meme stock rally on either of them is not yet concluded, but I think we will see a few days of respite as people start building up positions again and get ready for another squeeze up. I don't know if we see anything as high as what we recently got. Recently, my opinion is we'll probably see another push up of about 50%, maybe 100% up if we get real lucky, but that's just my opinion on that there. Let's take a look at some of these others. Home Depot. Home Depot reported earnings this last week, and since they reported earnings, the stock's kind of just been neutral. You can see right here before earnings, they initially were down, but then recovered that, and then are just sitting right here on this long-term volume-weighted average price anchored back here to 1027. So you can see they kind of rode a nice big wave up, had a big sell-off, and now they're riding right here along this volume weighted average price. We have a new volume weighted average price anchored to the recent high here, and it looks like the price is squeezing between the two of these. Personally, I don't think I would buy Home Depot at these levels, though I do like the company long term. The one thing I love about it actually is their very consistent dividend, and the dividend grows very consistently as well. So if you're looking for a long-term perspective, go ahead and just start dollar cost averaging into Home Depot, is my opinion. But from a trade perspective, I think there's a good shot that you could get a better price, maybe somewhere around 320, 330, or possibly even down in the 300 range again. If you look at, again, let's zoom back out. You look at Home Depot over the last 10 years, you can see it's had an incredible rally along with the entire market, Here was the big sell-off, and it looks like they didn't quite hit all-time highs here before moving right back down. But again, I think this 300 range, that would be maybe where I'd start accumulating a position if I wanted to swing Home Depot. Certainly down here at 265. Next up on the list is Rumble. If you're not familiar with Rumble, these guys are a YouTube competitor. They position themselves as free speech absolutists, or nearly so. It's kind of like what Elon Musk has done with Twitter or X. They're trying to do with the video sharing. So they launched a platform called Rumble.com that is a competitor to YouTube. Many conservative people, as well as others that got banned on YouTube, have recently moved over to Rumble in order to post videos there. And so far as I think they went public via a SPAC, and they had initial surge, and then since then they've just kind of slowly pittered down to where they had a low here at about $3. What happened here, I believe, is there was an announcement about Joe Rogan joining Rumble, or maybe it wasn't Joe Rogan, it was some big person that was like, wow, he's got a big audience, that was joining Rumble, and that gave them quite a rally. And it looks like it's sustained. This is what's interesting, right? So normally when you have a big rally like that off of some news thing, there's a, it may sustain, but it may taper off. What's happening here, though, is even through two earnings reports that aren't necessarily any better than their previous earning reports, right? Minus 14 is pretty much in line here, minus 21, even a little worse. Rumble seems to be holding up against that pressure, and again, notably, if you have this volume weighted average, we have a nice bounce here at $6 up to $7.50. So this is a stock I'm actually going to be adding to the $1,000 account challenge list as a potential stock to start it out in. Let's just go ahead and add that right now, and stay tuned for when that challenge starts. If you'd like to follow along, you're more than welcome. It's just an entertainment thing, though. We're going to be doing covered calls, cash secured puts, wheeling a lot of different stocks to see how quickly we can change $1,000 into 100 shares of SPY, which will be roughly $53,000 depending on what the price of SPY is by the time we get there. So that's Rumble for the week. Let's see what's next on the list. Walmart. Walmart had a massive rally on earnings. Check this out. They broke to all-time highs. So you can see here that's their longer list. They struggled for a couple years, and you can see here this was an earnings report about a year and a half ago or 2 years ago now, and it was just for some reason the stock market really didn't like it. They dropped from $50 a share all the way down to $39 a share, 20% drop there. Hindsight, of course, but it would have been an excellent entry into Walmart, and you'd be up about 60% or so since then. And on this latest earnings, you can see how they jumped from $60 a share all the way up to $64, and then ended yesterday just under $65 a share. It'll be interesting to see if this rally sustains on Walmart. I would guess that it similar to how it happens here, kind of just trades in the same little range for a little bit. A position I might consider taking on this would be something like a bear call spread. So what this does is it basically says you don't think Walmart's going to be going up that much more over the next little bit. So let's say I wanted to do it with these calls here. What I would do is I would choose probably this call 65, and I would sell it, and then I would buy this call 66. That's going to give me a net credit of $31 and a maximum risk of $69. So if Walmart continues to climb and goes above $66 a share, the maximum that I can lose is $69, but I can potentially get to keep this $31 credit if Walmart doesn't trade above $65 per share over the next 13 days, or by the end of the next 13 days. So it'd be an interesting one. I'd probably wait a couple of days to see if this peaks up a little bit higher and then try to get an entry in it. But even at its current levels, it looks interesting. Not committed to it yet, but it's a play I'm looking at. AMAT is next on the list. AMAT also had earnings, and I believe they're sitting at all-time highs or very close to it here. Yep, all-time highs now. And the stock was already quite high before earnings. The fact that it didn't drop those is what's most telling, right? So there's this big base here, little dip, and then it recovered, and then after earnings, they actually have maintained. They haven't fallen down. So it's interesting to see. Again, I'm not looking at an entry here. I would actually probably, if I think this isn't a bullish uptrend, if you look at these volume weighted average prices, look at these dip catches. Boom, 1, 2, 3, 4, 5. It cuts a bit here, but then 6, 7. And if something comes down where AMAT comes around 175 or so, that would be interesting to start a position for a swing trade. Next on the list, we've got, we're going to quickly look at these three. It's JD, Baidu, and Alibaba, three Chinese e-commerce giants. You can see here's JD reported earnings. They're in a little bit of an uptrend right now from what you can see. Big downtrend for the last 3 years, and it looks like they're starting to break that. If you zoom in here, what we start seeing here is a low, a higher low, a higher high, a higher low again, and a higher high again. So JD appears to be in an uptrend. I think a dip back down to the volume weighted average would be a good entry. It's going to be one that I'm watching. And let's look at Baidu next. Baidu, similar but not quite as strong of a recovery, right? You can see they made a higher high here than this previous high, but they haven't made a higher low or a definitive higher low yet, unless you want to count this as the higher low. So Baidu remains to be seen. I could see it fluctuating back down a little bit here, and so I'm going to not take a position on Baidu. Baba we spoke about this week, Alibaba, if it was time to buy the dip. I think it's actually a phenomenal time if you want to be a long-term investor. The earnings report also says, so I did a video right before Baba reported earnings, and it was hovering right around here, and I said, personally, I'd like to see if it comes back down into this mid-range, but I could also see a case where based on this previous support zone that it actually bounces up again, and that's exactly what happened on Baba. It wasn't a trade that I took because I didn't have conviction in it, but I could, and that's why I didn't take it, is I could see an opportunity for it to move back down or to move up easily with no clear direction one way or the other. This was a pretty convincing move off of earnings though, so I would say if you are bullish on Alibaba, it looks like we might have some sort of trend reversal here where we're going to start making some higher highs and higher lows. I would watch this level right here. This would be one of the most interesting levels for Baba, is right here at just around, I mean, $100 has been kind of a psych level, so we'll just move that price line down to $100. You can see it's been a psych level multiple times with a few small breakouts before moving back down. So that's where I'd be really interested to see if Baba can break through that level, or if it starts bouncing here between $80 and $100 per share. Two more on the list, and then we'll wrap up for the day. Unity Software reported earnings, and there was an initial sell-off, small rally off of it, and then a continued sell-off since then. I like Unity. I bought a small position with a tight trailing stop, and I ended up getting stopped out for like a 0.5% gain. And I'm going to be looking for another entry in Unity. I think that there's a good potential here. This is the psych level to look out for, 21.2. This is the all-time low of Unity. If they move back down, and they're very close to that now. In fact, let's look at what they were in after hours. Okay, they stayed above. So if they move down to below their all-time low, then that would be a little bit spooky. Not too bad, though. I actually think they have a pretty good value proposition at their current levels. And the platform itself, the software platform itself, is phenomenal for game development from my perspective. I'm not a game developer myself. I've just watched several videos about it and reviews from game developers, and it seems to be quite popular, especially among the indie dev crowd. This would be an interesting one I'm considering doing leap options on. Let me show you what leap options look like. It's basically just long-dated option contracts where you're looking for significant capital appreciation. So I could go January 2026, right? Literally 600 days till expiration. I could buy this call 23 for about $600. The nice thing about that is that if Unity's trading above $28 per share, or excuse me, $29 per share by expiration, I've at least broken even on that trade. And so this is where I'm looking and saying, okay, in 2 years, can they appreciate by roughly 25%, 15% per year or so? And I think there's a good shot at it. If you look at their historical, I mean, they had some wild surges all the way up to over $200 a share. And at that point, they weren't losing money quite as quickly as they are now. I think they had a little bit of a gaffe where they changed their pricing structure, and it ended up screwing a lot of developers that were currently working on their platform, and so they left. And I think they've had a hard time. I think the CEO if I remember right, the CEO who made that change was fired. They reverted the change. They've got a new guy in, but I think they're still working on building back some community trust there. And essentially the way it worked is it's like if your game is making between X and Y dollars, now you have to pay us like 3 times more than what you were paying us before. And so these game developers that were building these games and making money off of them suddenly no longer could make money because the pricing model that Unity changed to just completely evaporated their profits, and they ended up leaving. But now that that's behind them, we'll see if they can recover. I think there's a good shot, and even as just a short-term play, right? Like if you look at these tops here, we'll put a little price line in. Not a bad play if you're getting in and you're saying this is the general channel that it's been in. Yes, we've broken below the channel right now. It's happened a couple times before rocketing back up. I mean, $25 to $40, or even to like the mid 30s, 35. That's a decent swing trade right there. So I'm looking at that as, again, another entry at some point soon. And the last one on the list is Palantir. This was the last notable one. And Palantir had an initial surge on earnings before immediately selling off and then dropping below the prior price. And it does this a lot. The earnings with Palantir are just quite funky. By the way, we're going to be doing another video tomorrow on upcoming earnings to watch out for this week ahead. So make sure you tune in for that and hit that subscribe button if you didn't already. So here's Palantir, and you can see they've got so many times where on earnings they just jump, and then sometimes they'll continue to rally and then just sell off, and then jump, continued rally. This one actually sustained, right? It never came back down below. My guess is we'll never see Palantir below $10 a share again. I think that that's going to become the new... If for some reason there's a sell-off, $10 a share becomes the new psych level, I'd be scooping it up below $10 a share. Personally, I like what the company's doing, and I think they're executing quite well. And I'm going to be watching closely for a potential entry. I'd love to get an entry under 20. I don't know if it's going to happen again, so probably I'll just continue to watch it, and maybe if they have a poor earnings report, or rather an earnings report that Wall Street reacts poorly to, would be a good opportunity to get in. One of the other nice things about Palantir is they have some pretty phenomenal premium on their option contracts, right? So if you look at this from a strict option contract perspective, we'll go one more week out, because when market opens, this will be closer to 30 days. So if I'm going and selling this June 21st contract here for a call 22, and yeah, that's just above where the price is, but I'm going to get $100 on that, right? So even if Palantir goes above 22, maybe it gets to 21, 22 and a half or whatever, but I make $100 just in premium here, or I could go out to the 23, and let's do that. I could go out to the 23, I could make $60 in premium. So at current prices, 21.77, we're going to go 23 minus 21.77 times 100, and we're going to add 63 to that, right? So I'm going to make $186 on a $2,177 position, about 8.5% in 30 days. Not bad at all. Palantir is one for the challenge account. Once we get it built up to $2,000, or depending on where Palantir is trading at that time, $2,500, $1,500. This is going to be one that I likely enter to start wheeling because it has phenomenal premium. That's it for the week in review. Thanks so much for tuning in, guys. Hope you had a great weekend, and I hope you're excited for the stock market this week. We certainly are. And I'll catch you tomorrow on the next video.